Morning.
Morning, mate.
How are you?
Yeah, good, buddy. How are you?
Good. Long weekend, huh?
Oh, just Sydney, mate. I'm in Brizzy.
I was just Sydney only. All right.
Yeah, only Sydney. We had ours earlier in the year.
Yeah. Okay.
Morning.
Morning, Justin. Are you back home or are you back to Cornwall?
I was there and back in the day, mate.
Oh wow.
Nightmare. Yeah.
Is it for
Very
golf?
tiring, but no, I was working down there, so drove overnight, worked, and then drove back, basically.
Oh. Alrighty. So we've had some movement already. We've let's bring up the pen over here. So what's going on here? Alright, so we've got a busy week ahead of us. We're stuck in this channel that we've been pushing down and then sort of rebound and then down a little bit further, then up, and then down, then up, then down, then up, then down. Now we've gapped down lower over here. We've had some these. I didn't think these parliamentary elections were actually going to have as much of an impact, but looks like there's a real sort of shift in where people are sitting. We had Macron just called a snap election. We've had Germany suffer some defeats as well to the far right, and there's been a lot of uncertainty in the market, and these markets don't like uncertainty. So we've actually just straight away just gapped down over Asian session, and then Asian session didn't really continue the rot, just consolidated for a bit, and now we started as soon as the markets open, we've pushed down. So we never swept the highs, and I was looking for that on Friday. I was looking for London to push up and take the high and go down, but it never happened as well. Just absolutely just dumped. So, and it was pretty vicious on Friday because we had the labor report from the US. Let's bring up the little news calendar over here. Morning, Tony. Matt, how are you? Forex Factory. So just a fine Forex Factory doesn't have everything at all times. So I was just bringing up FX Street just to compare, because they do seem to have a little bit more of their smaller, or not smaller, but a little bit more detail in the newses. But last week got a huge week ahead of us. But the big news was the non-farm payroll. So the NFP, they smashed numbers. So they beat estimates by 50%, came in an extra 90,000 on top. The previous month was revised a little bit lower. Average hourly earnings increased. That was a big one. And it sort of offset the unemployment that came in higher as well. So this first time we've actually hit a 4 number for quite a long time. So when was the last time we had 4? Would have been COVID. Oh, Feb 4th, 2022. That's when, coming down still from the COVID days. And then it's the first time we've got back up to 4%. Now the quality of the jobs wasn't great, as in it still shows that there's not many full-time jobs being filled. It's more like part-time roles. But sometimes the market just cares about the number, not about what the number is made of. Anyway, it's sent a shock in most of the markets. US dollar mainly was the one that benefited from that. We saw equities recover late in the session, which is a pretty typical habit. That they do seem to have a bit of a bounce at the end. It was just all one-way traffic for this London session, which is a bit annoying. Now we've gapped down. Looking ahead, I'm cautious to give a view for too far in the future. So I'm not going to even try plan that, because one, we've got a lot of uncertainty in the market. Depends on what happens from this. I've also got very little today that's going to change things. Then on Tuesday we don't have a lot, a little bit of unemployment for pound, and then Wednesday is it's a bloody massive day. We've got US CPI, and then we've got the FOMC interest rates. So, oh boy, I'm not sure what they're going to do. I imagine CPI is probably going to come in higher. I'd say there's much more chance of it coming higher than lower. Given that this number 0.1% is the forecast, it's going to be really hard to shift CPI year on year down, because the number that they've got to replace is June from last year, and June from last year was 0.1. So the only way for year on year inflation to drop, which is what they're looking at, is for this number to come in at 0% or less. And I find that, I'd say the chances of it possible, the chances of it happening though, pretty slim. I'd say it's more likely, given the last 6 months has all been above 0.3. So the last 5 months, I would say there's a pretty good chance this comes in at 0.2 at least. That's going to put the year on year inflation up to 3.5, and then that's going to sort of dash any hopes of a rate cut. Now, looking at the FOMC as well, so the Fed funds rate currently 5.5%. Now, no one expects them to cut here, so it's very unlikely the actual announcement at 7 o'clock is going to have a whole lot of impact from the announcement itself. We do get the economic projections. This one here could give some market volatility straight away, because they're going to be the projections where they see. Also the statement. So we will see volatility at 7 o'clock, but it could take time for it to appear in the market, because no one's expecting them to do anything but hold. But they're going to be scanning the economic projections and the statement for clues. And then the real mover is going to be 30 minutes later at the press conference when Powell comes in and starts talking. So who knows what they're going to say. So there's going to be massive movement on Wednesday. Then on the Thursday, we've got more news. We've got the PPI, inflation news, and unemployment claims. But PPI is going to be, a bit of a leading indicator for the CPIs, because it's the producer side. If it comes in low, then it's possible that the CPI will track down later on in the year. Unemployment, we did have a tick up last week. So it ticked up from 220 up to 229. So we had a bit of a surprise, 10,000 difference, like 5% over estimates. Now, if we continue to see higher unemployment claims, that's going to bring a bit more focus in the NFP 4% unemployment rate. So we'll keep an eye on that one. And then we've got Friday. Friday, we've got the Bank of Japan policy rate. So huge news this week. Big shifts. So we'll have to see, we'll have to see. It's going to be an exciting week, that's for sure. We've already kicked off things here. We've already dropped down. So now we need to sort of see the plan. I imagine it can't be good for the markets, having this uncertainty in the market. So it's a shame that it's already dropped down. So should we just go with the momentum? Or can we look for signs? Like, I would expect to see a rejection from around this wick. That was a little rejection. So we could see price sort of pause at that level. Otherwise, I've got my eyes on this level, a little bit lower. But I will keep my eye on this wick. And it probably makes sense for price to push down to this, to this level. Plenty of little supports over here. as well. So I imagine that that's sort of where they're targeting. So I think it makes sense to actually continue the momentum to the downside. Hopefully we don't get too much whipsaw. We've started the 4-hour candle, basically no top wick. So very, very little top wick. So it's just been some sustained selling, leaving plenty of gaps above price to pull back if there is any sort of relief. But yeah, I think this as a daily target, like your closest daily target, makes sense. See if we can pull down, take the New York low, take the liquidity from underneath it. Got a nice little bit of demand zone underneath here, and then let's see if we can continue pushing lower and lower. But I don't think it will be a straight drop like that. I do think it will. The line will be way as it does. But yeah, I think that's what I'm going to look for. Just kind of go with these sells until I see if I see anything otherwise. How about you guys? What do you think?
Yeah, I mean, I was looking for a sort of push up at the open and then take sells, but obviously that's not happened. So pullbacks really, I think, and then take the sells off the pullbacks.
I'll check gold in the tick. Yeah, so this is where price sort of dropped from. All from this area. So I wonder if we can just retest this and then keep on going down. If it is that kind to us.
I suppose we still could get a push up at the open just as a sort of manipulation, and
I hope so. Hold a sec. Oh, okay, yeah. Yeah, it'd be nice if we can see some sort of manipulation, push up, and then retest. Dan, earlier plan, huh? Oh, I see. This is an Asian session still.
Yeah, before we had the drop.
I just decided to do that.
Yep.
Yeah, I mean,
Just that gap there just looks inviting, right?
it does. It does. Yeah, it does.
Hayden, I was doing some work with the indicator on German earlier today,
Oh yeah.
and I've got my eye on a move up before we go down,
Okay.
just because the indicator is giving us a strong sort of double bottom with a cross, and if you look above the Asian high, there's quite a large Hong Kong gap which has not been filled today yet.
Mm-hmm.
So I'm just wondering whether it doesn't make a move up first, because I think the move down makes sense. But yeah, probably just going to wait to see where the breakout is against the current euro level before entering anything.
Yeah, good plan. Good plan. That's good, man. Really, like, I think that's the best thing to be doing, is coming up with your own plan that you observe then, and then the more that you follow your own plan, regardless of what it does, but knowing that you're following your own plan is paramount. We're never ever going to be 100%. So, but it really is really damaging when we don't create that plan for ourselves. So that's why I really like seeing like sort of conviction in either way. It's not about who's right, who's wrong. It's about having that ability to look ahead and then try to visualize what you want to see, identifying zones and then seeing, because you can only learn from those. That's the best thing. But this, I agree. This gap we saw in last week, it did the same thing. Was it last week? It was, yeah, Monday. So we had a gap. It wasn't before price though. It was during the session. It just gapped up and then price pushed up. Then the Euro session definitely wasn't as volatile. But remember, we saw London pushing up and up and up and up and up, and we sold down into that gap. So now it's kind of something similar, except for the timing is a little bit different. Is that we actually gapped down before the market opened, and now we have had a single candle, and it's definitely been the elections that sort of causes uncertainty. But to be all honest, the market is not the economy. So I know everyone could think that German should be a reflection of the economy. It's business at the end of the day. So is this going to affect business decisions, or is it just money like outflowing, and then they're still going to see price? You know, if a lot of people are looking for sells, they can easily rinse people first before pushing down. So I like it. I'd like to see what price, if we do get that push up, and if I get price action, I'll probably give it a shot, but I am cautious of this gap as well. So I'm happy to watch and not try. We'll see. I don't really want to try pick a high. I'm happy to like catch the the end, or like not the end of the move, but like wait till it's done it and then take it down, rather than trying to like pick the high and then it keeps on going up. Friday was I was pretty pissed off on Friday with this rip down. I was pretty pissed off with it. So I don't want to take a loss on a Monday morning, and I don't want to jump into a trade like last time on Friday. You know, it was the end of the week. It had been a good week. I took a trade way too early, like minutes into the open, and it didn't work out. And I don't want to do the same thing.
Sorry, Hayden, can I ask, do you have any sort of worries about trading on non-farm payroll day, or do you just trade as normal up until the news?
Normally I'm a bit more reserved. Like it's not normally I don't expect much movement. So I didn't expect the market to rip before it. So I thought there was a good chance to, like, if we see the right price action confirmations and it's a good level, then yeah, sure, I'll give it a go. Because I'm only looking to take, say, to try and make it safe, and then see if the runner can do its job. Yeah. Normally I'm not overly bothered in the London session about it on the low time frame. But yeah, Friday just ripped. Hey Ty, how are you? Gold seems to be moving similarly to German. Hong Kong, Australian bank holiday today. First half of the day, very algo driven by the looks of it. Oh look, we're under 22.90 again. Yeah, I did see actually there's a lot of volatility here. Like the move itself doesn't look like a lot, especially on the hour, but just gold's so volatile lately. Like just this alone is over 100 pips. We had it was $100 day yesterday, on Friday. $100. I've only seen that happen once.
Yeah, I was just going to say, forget about 100 pips. It was $100.
Yeah, it's 1,000 pips. I think I only saw a day like that back over this day when it was like a blow off top, all-time high at the time, and Asian did a flash move of like 80 pips. Sorry, $80 over here. When Asian this one here just went boom straight up, $74, and then it dropped. So this day was big, $120, but I kind of disregarded that because this is that blow off top, and it was, you know, it's a real bizarre move there. But then Friday was actually like a sustained, but that was news, yeah, as well. News from reports China had paused buying. That's the PBOC in China, the People's Bank of China. They're the ones that said they just from their reports they didn't buy, or they halted buying. So it doesn't mean that China stopped buying. The people still buy a lot. It just means the People's Bank of China didn't. So I still imagine gold's going to have some. We'll keep an eye. If the market doesn't reclaim this high and actually has another rejection, then I'll be looking to think that maybe we are going to have a little bit more of a sustained pullback, because it's so freaking high in this that we've got some nice little demand areas down below. That's if we reject the highs and go down. If we reject the lows, reclaim the high, and then we could be looking at another run up. We'll see. Time will tell. All this uncertainty can't be good. Can't be good for fiat currency, but at the moment there's very much so US dominance, US dollar dominance, which overweighed any commodities on Friday. Yeah, the other weird thing about Friday was German was the one that was going crazy in the London session. Let's bring it up. Not till November, Ty. So German was the one that was going crazy in the London session, and I was caught off guard with it because NAS, which is pretty highly correlated, was barely moving at all. And even in the NFP, like it didn't, like it moved a lot, but it didn't move a lot, if you know what I mean. Like it's not the kind of like crazy day that we had on the other equities. Yeah, it goes for a while. I think they start in like September, and then the voting's in November. So the campaign, the actual campaign starts, yeah, like September, late September or something, and then I think it's like November, mid-November. Fifth November, sorry. Yeah. So just in that time we were talking, just then gold already bounced 40 pips. It was 22.88, now it's up to 22.92. We've got 8 minutes left. Alright, could this be the manipulation ready to go up, or we're going to have another leg down? Hopefully it doesn't. Well, I actually don't mind if it does take this low before the London Open, because then I'm kind of in two minds. There's a gap up here and we've still got more room to run. Uh, 10-year bond yield spread widens by the most. Yeah, that was insane as well, wasn't it? On Friday, just these yields just went bang. So if these are going to continue rising, then we should continue seeing German dropping. See how some of them are rising and some of them are dropping, like the 2 year, the 5 year dropping, the 10 year and the 20 year rising. What I saw was cool in TradingView is you can get like an average of all of them by doing, you go plus, you go DE02 year plus DE05 year, sorry, 05 year plus DE10 year plus DE20 year divided by 4. And you get an average. Sorry, where is it? Down here. You get an average of all of these divided by 4, and you can get a line to see like where the yield's going. Just an average of all of them, which is really neat.
So that blends those charts together effectively.
Yeah, yeah, really cool, huh?
Cool. Yeah, that's brilliant. Didn't realise you could do that.
Yeah, so there's one, a guy that I follow says that putting investment grade bonds with like something super safe like the US Treasury yields. So the US Treasury yields are the safest bet, and then you've got the bonds, the corporate bonds, which is this nasty code. But this is triple B rated, so basically called like junk bonds, ones that you should be getting a higher return for, because these triple B rated companies, corporates that issue bonds, they're not like they've got a high chance of failing, but if times are tough, then they've got a high chance of failing. So these triple B rated bonds, these yields, they should be quite high compared with something that's super safe, like the 5 year treasury yields. But in times of when investors perceive very little risk in the market, the difference between these is the spread. So when things are very low, the spread between these is very low. So you're basically getting the same return for something that got considerably higher risk than something that's very safe risk. Does that make sense? So when like we're almost at all-time lows, when they have had spikes, these have tied up with market crashes. So you've got .com bubble break crashing, and then we saw a spike up. We saw 2008 GFC price spiked up. We had a little bit of interest rate uncertainty here, like misforecasting, and then we had COVID. So, but if we look over the course of time, take out this little bit here, we're almost at the lowest we've been since the .com bubble crashing, which is showing that, you know, there's a false sense of security here. When these start spiking up, you would imagine the stock market will be coming down. But it's on the weekly chart, so it's very, very slow, yeah. And on the daily, we could probably start seeing it spike up, but if we start seeing some movement here, spiking up, then that will, the timing should coincide pretty well with the market coming down significantly. Well, having a little bit crash. But that was just comparing junk bond yields with something safe, and then just comparing on the daily. But pretty nice.
Yeah, I'm gonna mess around with that. It's quite cool.
Yeah. So you can create your own indexes as well. So you've got like Dixie, which is the dollar index, which takes 60% euro. I think something like 12% UJ, 11% GU. Then you've got different weightings for Euro CAD, Euro SEC, and Euro Swiss. but you can effectively do the same thing. You can go like do Euro USD 60%. You might have to do like USD Euro, but then do your calculations inside here, like multiply by 60%, things like that.
1 minute to the open.
Yeah. And you can create your own, like, because Dixie doesn't have Aussie or Kiwi in it, so you can actually make your own index basket, dollar basket index, using add in some of these, because you can actually add Aussie into this. All right, here we go. So we've opened. We tried to take out that low, the New York low. Hopefully we can take out that low. Creating liquidity above price. Bit of movement already. Doesn't look like much, but that's at 20 pips, 30 pips. Just got it so there's been so much movement already. Come on, come down to the line. Let's take this low. Hey Tom, come on, a little bit further.
Are you looking to buy off that line, or you?
Nah, oh, gap down. Nah, I wanted to see, this is my target, to take out this low. Now that we've got so much gaps above price, now I just wanted to see one of them taken. So now that we have taken it, I want to see, oh, look at this. Yeah, if we come down to the green zone, I'll be looking to buy. Oh man, look at that. Far out. Just from already 2 minutes, 73 pips. Keep going. Wow. Taking up the, oh man. All right. That was quick. That was real quick. $20 pips already.
Did you take a sell, did you?
No, buy from the green zone. Far out.
Morning.
Hey buddy, how are you?
Not bad, how are you?
Yeah, good. Didn't see you yesterday.
No, I was sleeping in because I went out the night before.
Oh yeah?
Dancing. So, yeah, deserve sleeping.
Oh yes.
What's the take on today?
We had elections. I'm securing you guys. Now it's 50 pips. Just like that. Far out. That's a massive movement. So price had come down was coming down to here. First, like, I didn't take any sells. Price was before the open. This was the target for that, at least a daddy target I wanted to see, because we've got gaps above price. So I wanted to see price. I'm not convinced that we just keep on pushing down. I wanted to see price at least take this at some stage, or push up without taking it and then give us a high and then trade down. After that, we've got clean skip base over here to the left, and they had that green zone. The green zone, if we have a look at the 4-hour chart, is lovely. So, probably not the 4-hour, sorry, maybe the hour chart. 30-minute. It was a green zone. It was structure here. So in this in this New York session, from May 7th, we had price push all the way up, and they've got the 50%. But we see this is where they paused. They paused beforehand, and we've never been to that zone again. Never been to that zone. So this is supply. Sorry. This is a demand zone right here. New York session, that's a stock market opening, 230, that red candle. So they pushed down and then they just boosted. So this was a line that had on my charts for a while. Oh, shoot. That was just a gift though, because I wasn't looking for, I didn't actually think we were going to get down there. Didn't think we were going to get down there from the open, but the open already just dropped from here down 100 pips. So, yeah, I had to freaking work quick then. Now, we've got the gap that's up here. Still got the gap. So, I would like to see that gap filled. I'm getting Monday vibes from last week. So, we look at Monday. Thursday. Yeah. Remember what we did on this one? When price gapped in the Asian session, price sort of went sideways. We had Euro session, and then we got the sells from roughly somewhere around here to target that gap. Got the sells from up here, secured a little bit at this point, which was like 60 pips, and then the gap. So I'm wondering if we're going to do something similar, because we've stolen a lot of liquidity from this area with the back of those a little bit of election shock. But man, that was super quick. Whew. Exciting. I'll show you some ideas as well after we finish the stream, based on what we did on Sunday that I'm looking at.
Mm-hmm.
Morning, OS. All right. Already, yeah, far out, retesting the low. So it'll be very interesting to see what it does at this zone here now. We've got this is the lower time frame structure. So it'd be nice to see a second structure pullback. Can we hold all the way up there? I secured a lot, but they've still got the runner going. Justin, did you grab any of the sell to keep on going?
No, do you know what? I got lost in there. I was sort of watching the market, and in the end, I didn't do anything. So I'm still waiting for sales. To be honest, I'm going to wait and see for one of those levels to be taken further up, and I'm still sort of, my bias is short.
Yeah, I mean, the least probable thing is to get full V-shaped recovery we often, when we made a low like we have, we'll like an 80% chance we do some sort of partial retest, partial if not full retest of the low. So we can imagine the 30-minute looking like this. We've got a lot of time left in the 30-minute candle, so anything could happen. But if it can sort of like come back and regather, and then it can still close bearish like this. If it closes bearish underneath here, then I imagine we keep on going down.
Yeah, I think if it could sort of get rejection off one of those gaps or one of those levels a bit further up, then I'll be in for sales, I think.
Yeah. Anyone else? What was yours? 30 pips? Sells. You took the sells down. Yeah, nice one. It's been a bit of something for everyone. We had a nice sell down, super quick, but then had a nice rejection from this zone. We haven't seen something like that in a long time, eh? Where it's just so much volatility in the first few minutes. Normally it just lulls us to sleep. Oh, hey Hannah. Back at Oz, do a bit of trading. Great to do some trading. Oh, nice one. Yeah, look at this, how we close back above here. What's gold doing? Gold 22.92. Gold gapped as well on that open. What about Nas? Nas nowhere near as exciting. Thin market, little bit thinner, because we do have the bank holidays. But now they're like, they would have exited for the day anyway. China's basically would have been closed. Not but they're not a major component. So I don't think it was a thin market. Monday's thinner though. Thinner than like a Tuesday. Alright, you guys have you formulated the plan now?
Well, the 15-minute closed quite a heavy rejection, so I'm not really sure.
If we get another bearish candle in this next 15 minutes, something like that, then I'd be pretty confident for the wick fill. So I think that would be it. That would give it, this next 15 minutes will tell a good story. So if we want to anticipate that, I'm cautious of the liquidity picked up in this wick. This could be a scenario where you don't go all in for your first trade. So as in, like, if you're worried about the wick having picked up liquidity and then doing a partial retest and then trading up, then what you can do is like get in where you still want to go with your initial bias for like a sell, but don't use full risk. But then once we get a bit more confirmation, you can actually use to, like, once price is sort of moving in your direction, you can scale into that. So you make your first position safe or something like that, and then add in to your second position, so that your second position is the only one that's got risk on it. So you're minimizing your total exposure, but you then add in weight. You never get the best price, but you get a higher volume trade for less risk. Less risk than if you went full up here, but you do get less risk reward. Getting multiple rejections on the 3 minute, these wicks here. It looks like it's grinding down. This is just looking like a little release. First high into a fresh area. A lot of volatility. Price comes back now. Comes back to the initial supply, that drop price. Yeah, it's looking good so far. Good 5 minute close. good chance for this 15-minute to close bearish now, to continue going down, fill this wick, drop lower. But it's like, I know it's a 30-minute supply zone over here. Oh, we have been here once. I didn't think we actually had tapped into it. But we've got clean candles. Once we get to the higher time frames, so like the hour, this is clean candles. So we could go a long way down.
Yeah, overall bias is short.
Yeah, it is. It is. I do want to just go with the momentum that we've got, because we had because you came in after, because the elections in Europe, surely that brings some uncertainty to the market. So I wouldn't be expecting to see higher highs created. But the thing that is what I was looking for on Friday as well was to take out like London, to do some sort of manipulation to go down, and we just never got it. It just went straight down, and now we've got Asian session, Euro. Like, we haven't really had any sort of manipulation from the top at the moment. It's just all downtown.
So there's momentum, but it's not necessarily sought out liquidity to drive it down.
Yeah, it's just because we're such a, like, if this was bullish momentum, then I'd have much more confidence in just like retesting near the highs and going down. But because we've been so bullish in the past, with this uptrend, there's going to be like little pockets of there's going to be a lot more little pockets where price sort of hits and they have vicious pullbacks, and it's just like I much prefer buying equities, because I find the ride is much smoother when it's trending, and then when it's selling, we get these kind of vicious pullbacks like this.
Yeah.
And then when we're buying, though, buying's a lot easier.
Yeah.
So we're doing something similar as well. So when we get to like a sort of untapped level, or a POI or ZOI, point of interest or zone of interest, when we hit them, I find we can have like nasty pullbacks. So it's nowhere near as much fun selling. It's fun when you sell and you get like just steep drops with uncertainty, like like any sort of conflict we see. You see like wicked drops. But when the drops are so hard to, unless you've got like a great position with these drops, you get heavy pullbacks. So I'm cautious that when I've missed the move or haven't anticipated it, then you got to find a place you can take. You can't hold on to for too long, as in you can't like hold this for days and days, because likely it's going to hit something, come back, and it's going to, if you've secured or made it safe, moving your stop loss, most likely it's going to be taken out.
No, on the 2 hour, which is closing in 30-40 minutes, it closes as a decent rejection, like it looks like now. This area it's propelled off has been, as you said, visited a few times before, and it hasn't even dipped as low as on the 4th of June.
Yeah.
So it's sort of like a triple bottom, So like, here, here, here. Unless I see a break and a close under here, then I would think we're still bullish.
Yeah, I think so. If it's retesting again, and we're getting like so we didn't quite touch that zone, but we got close to it, and we had this pullback. Then we tapped into it, and we've got a bigger pullback. And then if we've tapped into it again, and we only get a small pullback, and then we go into it again, then it's most likely then we're going to fourth time lucky.
You could have one of those days where German just hovers in the middle for hours and hours. We've had 100 pips already.
Yeah, we've already had a lot of excitement. We're on its schedule now.
I mean, it'll be a nice trade later if it does hang around here, to watch where New York goes first, and then try and trade up to the other end?
Well, for just simplicity, it's nice if we get a trending session like this. Like, as much as I hated the Friday London session, the actual buys for German were quite easy, because you know it's what's the likelihood of having such a trending session and then New York just continuing it? The probability of that is very low. Most times, if London's super bearish, New York will retrace some of that move, at least some of that move, if not the whole thing. So for simplicity, I really don't want us to be here when New York session is starting, because then it's a coin flip whether we go up or down, because we've got the gaps up the top and we've got gaps underneath this wick low.
Well, that's the other thing about Friday is New York didn't take the high from London, and it more often than not does once it's done that. I was trading back up to the top of London on Friday, and got the profit, but thought it would go further.
Yeah, it's not like NAS. So NAS takes the high and the low of London session most of the times. So like, because London session's
small London,
yeah, but it's not that small. We have had a couple small sessions, but London often is still like 100 pips. It's just the New York session is so much more violent, where we'll take the highs and the lows. But German doesn't always take the highs and lows. If we have a look at the past, if we look at the highs and the lows, it will often, like there were, like this one it did, this day it did, but all the other days, and this day it did, but all the other days it didn't. It pushed up. This time it continued. So this is the scenario I don't want to see happen, where London's very bullish and then New York just is bullish as well. But I believe this was no, that wasn't Nvidia. Not sure what that one was. No, that might have been Google and Apple actually. No, I'm not sure actually. But this day it didn't. This day it was very bearish, and then New York took the low and it gave you a nice little buy move, but never was able to take the high. This is the day that it wicked down massively. This is CPI. This on the 14th of May, that was CPI. That's why it was so crazy. Then Thursday, Wednesday, it took the high and had like a big reaction, but then it continued going bullish, never took the low. Then the next day, it trended, and then it's trended again. So this is an annoying day. Annoying when it, like, very easy to have got this one, got a wrong trade here, but this is coming from all-time highs as well. So I don't know, it could have been a case. Who knows? Anyway, we'll have to go back to that day to see how we sort of looked at it. Then this day, but we never took the high anyway. London made the low. We sort of took the high, had a little pullback, never took the low. This day we took the high and the low. This day here we took the low, never took the high. The Asian session took the high. This one did, took the high and the low. This day super move, took the high and the low, but this day never did. 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 All right, so 2 more minutes. Yeah. If this is closing bearish, if we can close under here, I'd say there's a huge chance for the wick fill. Needs to close bearish though. close. Close quite strong. Yeah, it's cute, isn't it, Hannah? Alright, so that we finally took the this bit from the drop. I don't know if we can get this to take the wick now. The 15-minute didn't close. I don't like how the 15-minute closed, but I think it's worth a shot. It'd be nice to see some sort of rejection up here now. Create some sort of like, because we've got the rejection wick. It'd be lovely to see some sort of rejection up here. To get something rejected in this wick. And then if we get that double rejection, we should be able to close through support and retest this low. But we need a rejection here. We'll keep an eye on all time frames. So 4 minute, if 4 minute can close bullish but underneath this wick, then I'd say that's still decent enough as a rejection. If we close above it though, it's not a rejection. Got 7 seconds. Okay, close quite strong. So yeah, at the moment it's just looking like it's made the low, pulled back, did a partial retest, and we're just grinding higher still. As soon as we see a rejection wick that stays inside of this area, I think it's worth a shot to retest. Is anyone long?
I would like to be long, but not from here.
Look at the 30-minute how it closed. Because the 3 minute has created that manipulation from the downside. If we're not getting that manipulation from the upside, then there's no sells.
I've got to drop, guys. I'll catch you tomorrow.
See you, Justin. Have a good day, mate.
Take care.
Yeah, it's looking like a solid rejection from this level now. So hoping the 15-minute was going to close bearish. It didn't. 5 minutes just not showing any sort of slowdown. We're just making high highs, high lows at the moment. Haven't got any sort of manipulation from here or respecting this wick just yet. So I don't think there's any reason to jump into sells just yet. And the 3 minute though, the lower time frame, after it's grabbed liquidity, it's showing that this is a bit of a support. So I would say, a safe trade. 3 minute. Oh man, just did close. That's a nice little candle. Trading underneath here is a good idea. So breaking that level, this could be a safe 30 pips, fairly safe, especially if it ties in with a higher time frame candle closing. Well, that's the kind of candle I was looking for. At least something to break the highs and then close bearish. See if we can continue. Yeah, look at that. Come on. If we can just close underneath here, it'll be beautiful.
Your long runner must be dead, Adam.
No, longs from
Have
down
you
here.
lost interest in it?
No, it's
Yeah,
just,
yeah. Have you still got your runner going?
I do, but I close so much of it that it's neither here or there what happens with it.
Do you if you go short, will you just leave that long trade running?
Yeah, because I'm not sure. Like, who knows if it gets this? It's like it was less than 10%. It closed like 95% of it. Oh, reaction. Look at that reaction. Damn. Yeah, so the safe trade closing through here will be beautiful. So put an alert for this area. Closing underneath that will give you a nice sell. Should give you a nice sell. But if we don't and we push up, then yeah, my runner can keep on running. So I don't want to close it. TP for the runner is that gap. But I'll be happy for the runner to close out if it means I'm in the sell going down to it. Because it's basically just for the runner now, it's over 90% of them close out for nothing. So this is like whatever happens for this one now, I try just, it's a nice little surprise if it does push up, but it doesn't actually matter to me. Never like seeing it sort of close out for nothing, but I'm not really expecting it to survive. I'd much prefer to be in with a higher weight for a sell to go down And then I'm like, I don't care if it closes out because it means I'm in the sell.
Hayden, where would you put your stops if you're in the sell if it closes under that zone?
If it closes
Big
under here,
stop.
yeah, I would. If it is like, if it's tying in, like you'd normally be saying above like here somewhere or above here, but if it's tying up with, like, if we start to trend on the higher time frame, then like put in the, like, you can have a bit more of an aggressive stop. Just put in the, like, what you don't want to see is a quick reaction from here. So put in the just above the candle, or like trailing it with whatever the higher time frame candle's high is. So you could just use like a 30-minute high or the hour high, 45-minute high. The thing on the 5-minute though, oh sorry, like maybe on like the 3-minute, if you've got like a fair value gap or something, then put it above the fair value gap at least. So if you have like candles, say it was like this, and next candle was like this, and then the next one wicked up, and then started pushing down like this, then put in these gaps, whatever the next one is going to be. We're not sure what this gap would be, but it could pull back to like here. So then at least put it above the gap, or above the higher time frame candles high. That's more like Raja style, but I'd say put it above something that makes sense. So I'd say put in your stop loss anywhere here. It might be good for risk reward. You might want to take that shot, just go for like quick momentum, but also, you know, it could easily come back and take that. Does that make sense?
Yeah, mate, got it.
Alrighty. You guys know the plan, don't we? So if I'm really looking at this level to close below, to continue pushing down. If we, sorry, had a frog. If we're really struggling to break down and this level holds, because at the moment for the 5-minute and 3-minute, not the 5-minute, more the 3-minute, this rejection candle and this rejection candle, at the moment that's my support. So I'm looking to see if we can actually close below that support to continue the move down, and then there's a chance that we can break this and you can keep on pushing it down. So like I would say your safe bet is to, if something closes underneath here, then you can target like down. Use this as like secure something here, and then maybe there's a chance that we can break this wick and we can continue down for quite some way because we've got clean candles to the left, and then that runner can do a real nice job. If we're really struggling and we're rejecting and we're starting to like retrace a lot of this move, then the danger is we've got a gap above the Asian session, so we really could go all the way back up there. For buys, we'd just want to see this hold, and then like a bit of a fake out, and then some sort of bullish structure forming, and then we can say New York session might do the job to fill some of these gaps. So that's the plan for German today. I'm not gonna cover gold because it's sort of stuck in like a fairly sizable range. Like we've got a big zone, so it's super volatile. Like this is, the euro's already moved nearly 100 pips, so could be danger. But I would say any sort of uncertainty is going to be good for gold. So I'd be preferring to buy gold if I had to pick a direction. Plenty of support underneath here. If we can keep on going down, I reckon we'll get a nice reaction from these two zones. But that's such a long way away, 200 pips. But I'd like to see some of that. Some of this move down from NFP day. I like to see some of that corrected. So I'd be looking for buys, especially if we get like some higher time frame candles failing to close lower and then closing above 2305. If we can close back above like this area, then I think we're going to have a pretty decent little, like wasn't much support on the way down, so probably not going to be too much support resistance on the way up. We could see a nice move up. 100 pips in one day, sorry, $100 in one day is a long way. Oh, did German just spike up 15 pips then? Sure, I saw 18,416. Yeah, German's sort of struggling to break out from this zone. Yeah, as soon as we close under here, I think we've got a good drop. All right, so YouTube, thank you very much. I'll see you tomorrow. Be safe today. Zoomers, gonna go over some ideas, what we covered yesterday. Alrighty. But YouTube, don't forget, give the stream a like. I forgot to mention it last Friday, and it was not a very good turnout. Plus, it was a crap session. So, anyway, take care, guys. I'll see you all tomorrow morning, bright and early. Zoomers, stay on.